Hey guys, what's up? Welcome to this channel. In today's video, I'm going to be walking you down to a strategy I use in trading the market condition that is trending, which is a Fibonacci retracement. Now, for the sake of this video, I'm just going to be releasing the video on a bullish trend because Fibonacci works mostly when the market is in a trendy situation, a trending condition rather. So, in this video, is going to be for the bullish, and subsequently in the future, I'm going to be releasing the video also for the bearish market condition also. So, like we all know, the market doesn't trend always. It trends in a zigzag formula. It goes up, pulls back, goes higher than the previous one, and just like that. So in this video, I'm going to be walking you down to how I trade the market condition using the word Fibonacci retracement tool. So there are three things that we're going to be looking out to on how to draw a Fibonacci. The first thing, we want to look at the market condition. Now in this scenario, like we can see here, this market is actually bullish. The market is actually in a bullish market condition. So what we're going to be looking for is opportunities to take the market to the upside. But first, let's look at the two things that we'll look at for in drawing our Fibonacci retracement tool. So we get it here. We look at the swing point, the swing point, the swing low, and then the swing high. So these are the major two swing points that we look out for. So what we're going to be doing is taking our Fibonacci, place it in the major swing point, and stretch it to the future. Now before that, let me easily identify something here. Fibonacci zones are this: 0.0, 23.6, 38.2, 50.0 fifth zone, 61.8 fifth zone. Now the 61.8 fifth zone is actually used as a good ratio, which indicates that whenever the market pulls back to that zone, you should be looking for opportunity to take the market higher than the previous high that was created, because the market is actually in a strong bullish trend. Why the 38.2 fifth zone is actually a zone where you can look for opportunities to buy the market and take it to the upside, because the market is going to continue its trend. And then the other one, 23.6, now is mostly used when the market is not actually on a strong zone. It indicates that the market is going to be trending, but the trend is about to come to an end, that there's about to be a reversal in the market. And lastly, the 0.01, these are used as exit point. 23.6 is also used as an exit point. So whenever you place your trade, let's say the market is like in this scenario, this market is here, it pulled back to this 61.8 fib zone. Now your first target you should be targeting is this zone here, the first 0.1, 0.0 here. That should be your first take profit. So that should be your first take profit. So let's take this up a little bit. And the next place the market pulled back to was the 38.2. Don't forget, this was the last swing point. So let me take this out. You can still do this here. The market came to the 38.2 fib zone, and here we'll be getting an entry here, this zone here, and right in the market, this also should be our first take profit, the 0.0. We should be exiting this trade here. So as we've seen in this chart now, we've been able to get two entries from this market, Now it is very easy to understand this when you understand the market pulls back So you want to be waiting for the market to pull back for you to get an entry and ride the market to the what? To the upside. I need to take note of this. Now I see a lot of fools see market something like this. When market does something like this, they say this is the last swing point and this market is about to reverse. Whoa, it's not so. That's wrong. The analysis actually is wrong. So this is the swing low and this is the swing high. This is the swing low. So the market is not about reversing because this high was higher than the previous, and this one was actually higher than it. So what we should be doing here is get our Fibonacci retracement tool and know what the market is doing. And also let me quickly point out something. Whenever you're doing the Fibonacci, the 0.0 should be above and the 100 is actually 0.0 to 100, while in the bearish condition is actually 100 to 0. So because we are training on this video only on the bullish condition, it's going to be a 0 to 100. And let's draw it to the future and see what the price did. Price actually came down to the 61.8 fib zone. Now what we should be doing is looking for an opportunity to ride this market to the upside. Guess what? You're going to be entering the market here and trending what to the upside. So we draw a trend line. So once the trend line is being broken, we're going to be exiting the trade. Let's see what price did here. So this pullback was not major. It was not a major pullback. Get this here, see. So as you can see, this retracement shows that the price did not retrace to any of the fib zone we mentioned earlier. It didn't come to the 23.6, it didn't come to the 38.2, rather it just came to that zone there. So we should be thinking that the price is about to what? Reverse. And what did we see? We got a trend line break, which indicates that the market is about to what? Reverse. Now let me quickly show you something here. Now as you can see here, it's a double bottom, triple bottom. It's a triple bottom, and what happened here was a break of structure. Structure was broken and the price came back down. Now this shows that the market is about to change its structure. What you quickly do is wait for the retracement move, and what you'll be going to do is draw the trend line, draw the Fibonacci retracement line, and wait for price to react to it. This is our swing high. So price came to that zone after breaking the structure, came back down. It will be very wrong to buy immediately. You're going to be waiting for retracement. And where did it come to? It came to the 61.8 fib zone, which is this. So you're going to be looking for an entry, and guess what? After getting an entry, you want to do something. That's draw your trend line. I always love to use my trend line as an exit. Once it is broken, I know the price is about to move in an opposite direction. So what I'll be doing is drawing my trend line here. Okay, I think this was it. And what did we see? There was a trend line break. So I'm going to be exiting this trade here in this market. So because immediately the trend line was broken, price reacted back to it and took price to the downside. So this is how Fibonacci retracement work. Whenever you see a break of structure here, you're going to be waiting The first time I newly started trading, what I used to do was I get an entry here, and I'm looking for opportunity to rise the market back to the upside. But really, I got familiar with Fibonacci. What I do is, after saying something like this, I draw my Fibonacci. Sorry. The last swing low, take it to the swing high, and you wait for price to react to it, and it came down to the 61.8. Don't forget, I said this is a golden ratio, which shows that the market is going to be trending even more higher than the previous high. So your target should be this 0.0, and you draw a trend line, hoping to take market to the what, to the upside. It's always cool to always wait for change, market structure change first before using your Fibonacci. See what happened here. This was a triple bottom. Immediately we saw the triple bottom, we knew that the price is about to change, which shows is an indicator that the market's about to change structure. So we got a break of structure, and we waited for price to react back as a retracement before what, moving higher to take our orders. The reason it's called retracement is because it comes back down to get orders, to take orders from what, buyers, and ride packet to what, to the upside. So that will be all for this video, and don't forget to subscribe, like, and hit the comment section in case you have a what question. I'm going to be leaving the description below. I'm going to be leaving a link where you can get access to the new video we're going to be releasing also, uh, about the bearish market condition, about Fibonacci. So stay tuned.